Man, I liked Index before this podcast, but like talking this through with you, I am like so bullish on Index right now. Like I like want to just end this podcast so I can go buy some more right now. I'm not even kidding. I'm like actually serious because I just don't see how this is like this weird. You guys have the Infinity Gauntlet right now. Like literally, the PRTs are such an overpowered thing. It's blowing my mind right now because again, you have unlimited airdrops, and that's like we see how effective airdrops are, but you have it in a weird, sustainable way. I'm like racking my brain trying to think, how does this break? How does this, like, what's the weakness? What's the weak point? But I can't figure it out because it doesn't seem like there is one. Welcome to the Never Die Podcast, your weekly alpha for those who never quit. Today we have on Anthony from Index to talk about a new concept out of Index called PRT tokens. This is a brand new paradigm shift for crypto that, in my opinion, gives Index essentially crypto's version of the Infinity Gauntlet. And it should allow Index to massively accelerate the amount of indexes they're able to launch going forward. Let's dive in. So I guess to get started then, can you explain what is Index? Just like a really easy explanation, assuming that somebody doesn't like have any insight or understanding into what it is.
Yeah, sure. So the basic idea when Index Coop was first started was that they were going to launch this product called the DeFi Pulse Index. And this was built in conjunction with the SEP protocol and DeFi Pulse, which if you weren't around at the time, DeFi Pulse is kind of a precursor to DeFi Llama. DeFi Pulse doesn't really exist anymore in its form, but back then, DeFi Pulse tracked the TVL of all the DeFi projects that existed, and there was an idea that we needed to create a product that tracked the top DeFi tokens, and so that product launched in September 2020, and it's been running without a hitch ever since. And since then, the kind of ambitions of Index Coop have grown to want to create other types of products. So, for example, after the DeFi Pulse Index was launched, there was an Ethereum and Bitcoin flexible leverage index. So that provided roughly 2x leverage on ETH and Bitcoin, and that product stayed rebalancing such that the leverage ratio would always be around 2. So you would always kind of, if you join that product at any time, you would always get kind of a 2x leverage position on those assets. Index Coop's also launched Metaverse Index, several other sector indexes, which were kind of hot at a period of time, but then they kind of lost their fashion. And then Index Coop has also ventured into some yield products. The most successful of those was called ICETH, which is the leverage staking trade. So you would kind of hold staked ETH, borrow ETH, and then loop that to generate kind of a higher yield than you would on just holding plain staked ETH. And then the kind of final category that I would say we've ventured into so far is automated strategy products. So we recently launched a product with CoinDesk Indices called the Ether Trend Indicator Index. And that basically rebalances according to a signal developed by the CoinDesk Indices team. And so it rotates between ETH and USDC depending on the market conditions. So kind of at a high level, what Index Coop does is try to take a strategy or a basket of tokens and simplify that down into a single token that a user can hold to gain exposure to that investment thesis, whether that's betting on a sector, betting on kind of a broad market, betting on leverage, or betting, on a strategy.
Yeah, and just to break that down even further, the basic concept, you said it really, really well, the way you just said it, which is that, like, say you have a sector, like you mentioned the DeFi Pulse Index, so that's like DeFi, right? So like, say you're like, I want to invest in a DeFi, would it like, but I don't know anything about DeFi. I just know a lot of people talk about it. Sounds cool. I want to put money into DeFi, but I don't know, should I buy, this token or that token? Instead of having to know what token to buy, you buy an index of tokens. So it's going to have like things like, what is in the DeFi Pulse Index, like Uniswap?
Yeah, so it's the largest DeFi tokens by market cap. So you're going to have Uniswap, Lido, Aave, Synthetics. I can't recall everything off the top of my head, but there's about 10 tokens in there. Currently, that has shifted kind of over time. So this product rebalances quarterly. So if you're not familiar with rebalancing, basically, that just means that every month or every quarter, I'm sorry, we go in and we get the new weights based on the data. And so we'll update the composition of the index to match what the market is saying. And we'll do that by a market cap weight. And so that keeps this token, the DPI token, to constantly track the DeFi market.
Yeah, so it's a basket of assets. It's not even equal. It's very much balanced, and like you said, it rebalanced over time. So that maybe there's a certain portion of Uniswap, but there's not going to be an equal portion of Compound or an equal portion of Lido. It really depends on the way that whatever formula you guys have for that index. But it makes it really easy for the average investor to say, I don't know anything about Compound or even what Lido is or Uniswap is. I just want to invest in DeFi. And so boom, they buy the DeFi Pulse Index, and now they're invested into a basket of the top assets in that category, allowing them to get exposure if DeFi is the next big thing that like explodes up and this huge, everyone wants to get into all these DeFi tokens, allowing them to get exposure without taking the risk of like just throwing money at something they don't understand. And the same thing with like, you guys have like a top, like just top cryptos. Basket. What's that called again?
That basket is called the Index Coop Large Cap Index, and we built that in conjunction with 21 Co, who is kind of a large player in the crypto structured product space, but mainly dealing with off-chain structured products, and so they were really instrumental in helping bring that product to market. But the main idea is like, hey, you can just go in, buy this one token, which is called, the ticker is IC21, and now you have exposure to Bitcoin, Ethereum, Solana. You can kind of go down the list of the top 10 cryptos. And that product was launched in, the third quarter of 2023, and has performed just exceptionally well, because, the market's been up, but it also has a decent chunk of Solana in there, and Solana has done really well. And a lot of people might just say, I just want to hold Bitcoin, or I just want to hold ETH. The problem with doing that and not diversifying is that you're going to miss out on some of these huge winners, like Solana, that have done, I guess, a 10x or more. And so diversification, it helps you to get exposure across a number of assets, where, especially when we're talking about these large cap assets that are on different chains, they're not the easiest thing to get exposure to, and to have a diversified portfolio when you're talking about multiple chains, and many different assets.
Yeah, and it's like there's people that just broadly say, hey, I want to invest into crypto. And so that's the product for them right there, is like, if you want to just be invested into crypto, that index is for you, because you're going to get Bitcoin, Ethereum, Solana, and all, it's like the top 10 or whatever assets by market cap, excluding stablecoins. You're going to get exposure to those assets. And like you mentioned, some people might be like, well, I'm just going to buy Bitcoin, or I'm just going to buy Ethereum, or I'm just going to buy Solana. But sometimes there's risk in that if you don't really know what you're doing, because you might, in 2017, one of the biggest, coolest things to own was this thing called Litecoin. 2021, Litecoin did nothing. It's so underperformed the rest of the market. It was ridiculous. And so you might think like, oh, this asset that I knew about last cycle is going to do well. And you're not maybe up to date on like the trends and what's happening right now. But this product, it's all this stuff's done for you in a way, so that you don't have to worry about those things if you're not really an experienced investor. And that's why I think it's such a cool thing, is because that's like 99% of people in crypto. Like they don't actually know what they're doing.
Yeah,
They're just throwing money at things.
Oh, so I was just going to say, it's not really just, for the average person or the kind of unsophisticated investor as well. I mean, I think that is, a perfect place for a new crypto user to go to. But this is how, in traditional markets, people invest in index funds because they are really hard to outcompete. It's really hard to beat the market. And having that diversification done for you and just tracking the market is a great way for really anybody to kind of get broad exposure to what is one of the highest performing asset classes of all time.
Yeah, I mean that's a really good point. I'd probably be like the hyper advanced user. Like this is what I do for a living. I'm on chain all day doing stuff. And it's a lot of work. Like I have to stay up to date with all this ridiculous information, all these different things. And I miss things all the time. Like there's things that I miss out on. Like I had a little bit in Solana, but I didn't have like enough in Solana when it went up. And there's quite a few other things that I'm sure I will miss going into the future. And so, if I wanted to like relax and stop doing like 8 hours of research every day, why not just throw it into an index of like, these different sectors, and then boom, I can relax. I don't have to worry about all this research. Like I get to, like you said, indexes typically do outperform most investors. And so I get to get all this upside exposure without having to put in all this ridiculous amount of work. And so, but my question is, okay, I love this. I think it's amazing. But when are we going to get other indexes? So like DeFi Pulse Index is great. The like top market cap index is great. But what about like a crypto gaming index or a crypto AI index, or name your cool narrative that like people are excited about, meme coin, maybe even index. What's stopping Index from releasing a ton more products like that?
Yeah, sure. So I'm going to go through kind of how our indexes actually work, and that will illuminate why it is difficult to build an index in the first place, and kind of what our limitations are, and then how we're trying to solve that. So the way that our products work, we have a protocol called Index Protocol, and each of the products that we build are fully collateralized. So in the case of the DeFi Pulse Index, for example, what you need to do in order to issue new units of the DPI token is to actually go out and buy all of the underlying components. So there's about 10 of them. You'll have to go out and buy all the underlying components in the exact quantities that are in the index. And then you can deposit that into the DPI token, and new units of the DPI token will be created. And if you're thinking, well, like for the average user, that doesn't really solve anything because now I actually had to go out and buy all the underlying components. You're right. What Index Coop tries to do then, though, is create a product which can sustain itself by having enough liquidity. And this is the ultimate challenge. So by creating a secondary market, this allows most participants to just get in by buying and selling the DPI token, as opposed to having to issue and redeem units of this token. And when you're issuing and redeeming units of the token, that's very gas intensive. You're having to do multiple swaps. You're having to transfer multiple assets. And so to issue and redeem new units of a token, it is very expensive. And this is why really only the most sophisticated actors on chain are the ones doing issuance and redemption for the most part. And so when you talk about like a gaming index or a meme coin index or kind of any other index you can think of, one of the challenges that you have to think about is there going to be enough trading volume to make it appealing for liquidity providers to provide enough liquidity for this product such that the average user doesn't need to issue and redeem units whenever they want to get in or out of a product. So I'll kind of pause there. Does that make sense, Jesse?
Yeah, that does make sense. So you have kind of these structural issues that are holding you back from being able to launch all these different products, and it's kind of a supply and demand problem. Like if there was enough demand, if this was like everyone was using index products, you guys could launch new indexes all the time. but because the market hasn't quite caught on to indexes, like this isn't like a normal huge thing in the market yet. This is a little bit more of a tricky problem.
I think so. We kind of say internally that demand for the indexes kind of solves all of our problems. But there are some issues that we face that are not just related to demand. So, when we're talking about our products are mostly launched on Ethereum mainnet, and the gas costs there are prohibitive for even just for swaps. It can be, as you know, $20, $30, sometimes more just to swap a token. And so if you're buying a couple $100 of an index, and it costs you $50 to do a swap, that's 10% of your capital kind of gone right there. So even in a world where it's very efficient to create and redeem units, if swap costs are very high, then it's a challenge. Now, the obvious solution that most people might think of is, well, why don't you just go to layer 2s? And that's something that we are exploring. But the challenge there is that a lot of the underlying components in DPI and all of our indexes, so Lido, Compound, Uni, all these tokens, the liquidity for them exists on Ethereum mainnet. And so as for the time being, that's where our products need to live. That needs to be our native place for the product. And so until kind of the gas costs problems are solved, we are a bit limited in what products we can create because there needs to be enough demand for the product. And that kind of crowds out some of the niche products that we might want to create, but there's just not enough demand to sustain them.
Well, recently you guys launched something new, and it's called PRTs. What are those, and do those play a role in helping solve that demand or kind of cold start problem?
For sure. So PRTs stand for product revenue tokens, and they are an idea that we've kind of been conceptualizing for quite some time. And the idea is that, well, just to back up for a second, Index Coop, when it launched, it had some generous incentives to encourage liquidity for DPI when it first launched. That was the only product at the time, and we spent a lot of incentives trying to build up liquidity there. And we used our native token index to do that. We were able to get a significant amount of liquidity. I don't recall the exact figures, but it was well over $10 million in liquidity for DPI. And this was great because it allowed people to get in and out of DPI at very low costs. It was very efficient. But we had tried, doing some more liquidity mining campaigns with other products. We did it with MVI, our Metaverse Index. And that worked as well. But what we were realizing was we only have a finite number of index tokens. And if we want to be able to continue launching products, we can't keep burning through the index holdings that we have. So product revenue tokens were this way that we can incentivize a specific product and kind of have this perpetual form of incentives every time we launch a new product. The way that PRTs work is that they allow the early adopters of a product to receive the future revenues of a product. We're launching a new product right now called High Yield ETH. It's an ETH yield index, which kind of tracks some of the highest yield opportunities on ETH. And we're testing this PRT idea out on HYETH. And so the way this works is people that deposit early into HYETH will receive some PRTs as an incentive. And then they will be able to receive a portion of the revenues that are earned by HYETH, as long as the product exists. And what this allows us to do is to build up a big base of users and to show some market demand before we actually go ahead and launch the product. And so our hope is that we can use this PRT incentive idea to bootstrap new products, generate enough TVL in the product to generate enough liquidity for the product so that when we do our formal launch of the product, there is already the liquidity in place, there's already a large base of holders, and there's already a significant amount of TVL. And what that does is hopefully to encourage liquidity providers to come in and provide liquidity for these products, because they'll already know that there's a large base of TVL out there that will want to be swapping in and out of these products.
Okay, so it's to kind of give an overview. You were doing minor incentives. You were like saying, hey, if you come do some liquidity for this product, we're going to give you some index tokens, and these are worth money. And so you want to do this. And so they're like, oh, wow, cool. We want some index tokens. It boosts our yield. And they were doing it. But then you realize, okay, we can't print index tokens forever. We can't like give away our index tokens from our treasury for forever. If we do that, we'll run out of index tokens, and then what? So we need a better way to do this. And so your solution was PRT tokens. And the idea is per index, as an early depositor, you get a special token that entitles you to the yield of that index. And so, if that's a really successful index, you could actually make quite a bit of money with these yield tokens. But these are separate tokens, nothing to do with the index token themselves. They're separate tokens that whoever deposited that they get that entitles, say they had 10% of the total deposits for that index. And from my understanding, they'd get about 10% of the yield. Is that correct?
Yes. So if the way that PRTs work is there's a fixed number of PRTs for a given product, and there's no inflation schedule or anything like that. So that's right. If you have 10% of the total supply of the PRTs, then you will earn 10% of the revenue generated by that product. And as you said, if you are bullish on the success of the product, then PRTs are a great asset to hold, because then you can actually participate in the upside of the success of the product, not just in the kind of performance of the product itself.
Got it. So if I'm like, okay, Solana's the future. You guys are doing a Solana index with all the top projects on Solana. I want to get in on that. So I'm like, I put a ton of liquidity down, a ton of money like invested to the TVL of this index to get it like jump started. And I get a ton of these PRT tokens. And I'm like, great, now I'm entitled to the yield from this index. And if a lot of people invest into this index and it produces a lot of yield, I'm going to make a lot of money and if I believe in, the future Solana and all these products, that's a good thing. Cause this could be, maybe this index goes on for the next 10 years, 20 years or something. Like that's actually could be insanely lucrative. The benefit for you guys is like, it's the cold start problem. You need people to come want to do this. They're taking a risk because they don't know for sure if it's going to be successful or not. But they're willing to take that risk because if it is successful, they win big. And if it's not, then, whatever. But either way, you guys are able to get this thing going. And at the same time, you're able to kind of get an idea for the demand of this product. If you launch an index for like, hey, this is a, whatever obscure chain index, and nobody comes to, commit TVL, you're like, okay, people don't think this would succeed. This probably isn't a good product. But if you do like a meme coin index and this thing just like hits cap really, really quick and, tons of people deposit, you're like, wow, there seems to be a lot of demand for this. And, we've got it jump started. So maybe this is going to be a really successful one. So kind of, it helps solve multiple problems at the same time for you guys. And from my understanding, the index treasury actually gets a percentage of all these PRTs as well. So just by default, the index treasury is also going to get a percentage of these PRTs, which is kind of how all this value ultimately still flows back to the index token.
That's 100% right. The thing is that, historically with Index Coop, we had a setup in our fee structure where we would give a percentage of the revenue to the methodologist. That's the entity who kind of designed the rules for how the product will rebalance and recompose itself over time. We were traditionally kind of giving away 30% of our revenue to this methodologist role. And what we've realized is that that's not really necessary. Instead, we can take that percentage that we had been giving away anyway and give that to actual users of the product instead. And that is much more valuable to us in solving the cold start problem than to pay a methodologist in revenue. So Index Coop's net revenue is not really changing in any meaningful way in this new structure. Instead, we're just shifting, kind of where that other pot of the revenue is going, shifting it away from this third-party entity who is the methodologist to the actual users of the product. And as you mentioned, it's great for us because it allows us to gauge the market sentiment before the product is even launched. And this helps us to save a lot of money and effort in not marketing products and not taking products fully to market that don't have any demand. And if nobody is depositing in, then we kind of have an idea that, the market's not really bullish on the success of this product, and perhaps we shouldn't launch it.
There's a lot to that. So basically for Index, it allows you to launch more ideas a lot quicker and a lot easier. And that's important because the right product is actually insanely more valuable than like the not right product. And that it probably doesn't make sense, but to give you an example, I'll make YouTube content. Like I have a YouTube channel, and like say I'm like excited about a project and I make a video about that. That video, if everyone else isn't also excited about that project, like maybe they'd never heard of it, but if when they hear about it, they're not excited about it, it doesn't do well, right? But if it's a good project that everyone else also feels like, man, this is a great one, then that video does exceptionally well. Not like a little bit better, but like night and day better. And also like with a business, right? You could try all day and night to like have the best salesman sell a product, but if nobody wants that product, if it's not actually a good product, it's really, really hard to sell that. Where on the other hand, if you have a product that everyone wants, like this solves a problem that everyone, needs solved, and it's just incredible, then those things fly off the shelf, even if you have a horrible sales team. And so for you guys with Index, there's certain indexes that just people aren't going to care about. Like, doesn't matter how much you try to pitch it. Like everyone's like, I don't care. And there's going to be other indexes that everyone's going to love. That's like, you won't even have to do marketing. Like these things are going to, everyone's going to want to buy into it. And so this allows you to find those a lot quicker because you're able to launch a lot more different types of indexes and then find out which ones have product market fit and which ones don't.
Yeah, that's exactly right. We've spent a lot of time working on indexes in the past that have gone to market and others that haven't gone to market. And what we've learned is that we are not great at predicting what the market is going to want. It's very difficult kind of task. And so we kind of just decided with this that, okay, instead of trying to guess what the market wants, we have plenty of ideas of products that we'd love to bring to market. Let's just put them out there and see if people kind of vote with their dollars, so to speak. And if the market demand is there, then people will deposit into these products because in a way, it really is kind of risk-free to deposit into one of these products to receive the PRTs, to deposit into the pre-sales to receive the PRTs, because you're not really risking any of your capital. You're just signaling to us that, hey, I actually want this product and I really believe in it, and I'm going to be early to this product. And and because that hurdle is so low, it gives us a really good sentiment. If people aren't interested in the product at all and it's not getting a lot of deposits, then and there's very little risk in actually depositing, then we have, and there's this big incentive, then we have a really good sense that, okay, if we actually bring this product to market, nobody is going to want it. And we can save ourselves all the marketing efforts that we would typically go through, all the kind of formal go-to-launch stuff that we have to do. And we just say, okay, we were wrong on this one. But it's much better to figure that out before we formally launch the product than afterwards.
Yeah, and you mentioned the low risk, because isn't it like if you deposit into it for a PRT and it doesn't go to, like, you don't end up launching it because it doesn't hit its like quota or whatever, people just get their money back, right?
Yeah, you just get your money back. And if the product does go to market, then you just get the product. Your deposit just converts into the product. So with this high yield ETH product that I had mentioned, the way that works is you deposit wrap staked ETH, you get one high yield ETH token back. This product has actually been successful. We've hit our target. And so in a couple of weeks, this product will actually just rebalance from wrap staked ETH into the actual composition. And you as a pre-sale depositor would just be holding the product token. And then you'll receive the PRTs in addition. So the kind of two outcomes are: one, you just get your wrap staked ETH back if it wasn't successful, and if it is successful, you end up with high yield ETH. And it's yours to do with what you want.
So it's a lot like a Kickstarter. So like if a Kickstarter doesn't hit its goal or whatever, like people just get refunded. But if a Kickstarter does hit its goal, then they go into production, and then people get whatever product they paid for. Only in this case, it's like you mentioned, their ETH gets converted into the actual index token that not index token, but like whatever that index is, they deposit it into. So
that's exactly
the high yield
right.
ETH token, and then so they get the high yield ETH token. And are you guys worried about? Are you guys nervous of like people saying, "Okay, cool, we got it," and then they sell it and they keep their PRTs, and then they're gone?
Yeah, so we've been playing around with a lot of different ways that we can use PRTs. The design space is wide open, and that's something that we think could definitely happen. Is people deposit in, and then they get their PRTs, and then they redeem the high yield ETH token, and we've kind of given away all these PRTs and haven't gotten much. So that is a real risk that we're concerned about. But this is the first time we're actually using PRTs, and we've already learned a ton of lessons and have a bunch of ideas for how we want to improve upon future uses of PRTs for different products. And so what we'll likely do in the future is probably have smaller incentives for kind of the pre-sale, but then use these PRTs in order to incentivize other actions like providing liquidity or maybe utilizing Pendle markets so that people can earn additional yield on the product itself, and then the people that want PRTs would be able to pay for that. So there's tons of ideas here that we could do, but we're going to be monitoring the high yield ETH PRT launch very closely to see what people do once the product is rebalanced into the final composition, and once people get the PRTs, and whether they hold on to them or not. I think even if everybody wants to redeem, this will still have been a success, because one problem that you have with just launching products in DeFi is that nobody wants to be the guinea pig. Nobody wants to be the first person into a new product. And having a good base of TVL there is just a good way to kind of show some proof that, okay, other people believe in this product as well. So with the high yield ETH, the one caveat that we have is that people will have to hold the high yield ETH token for at least 30 days after the product is officially launched. Otherwise, they'll forfeit all the PRTs that they've earned. So at a minimum, we'll have 30 days of kind of all these people that are deposited into the pre-sale holding that high yield ETH token. And hopefully we'll be able to attract a whole lot more TVL during that time.
Yeah, that's what I was going to say. Like you could play around with vesting periods, especially if you're trying to get indication of like, would people actually put their money in this index? A good way to be like, hey, you have a 6-month or even 12-month vesting period into this index or whatever it is. Then they know they'd have to hold this index token. And if they felt like, yeah, I would love to hold an index of high yield ETH things, or an index of Solana tokens, or an index of layer 2 tokens or whatever, then you have a great product, and they're vesting in it to earn their PRTs or whatever. Yeah, I'm sure there's so much creative space around that you guys have to solve, and you guys just waiting for the data. And once you get the data, you can adjust and incrementally improve. And I imagine over time it'll become a really seamless system to get these things off the ground.
Yeah, I mean, one thing is that these PRTs are almost like the native token for a sub-DAO, and that sub-DAO is the product. And the nice thing about this is that we will have many products come out over the coming years, and we'll have many opportunities to just fine tune the distribution of those tokens, and the incentive schemes and the all the kind of ideas, we can continually improve on that. So we're not going to get it right on the first time. We're probably not going to get it right on the second time. But because we have so many chances to kind of get this right, I think that will eventually, hone in on what is the optimal kind of incentive structure.
Can the PRTs be sold as well?
Yeah, so this is something that's really cool, is that the PRTs are freely transferable. They're just regular ERC20 tokens, just like any other token. And we think that the secondary market for PRTs could be very interesting.
Yeah.
Just to kind of give a brief overview of how PRTs will work. So PRTs will have to be staked in order to earn the revenue from the product. In order to stake, you will need to be a non-restricted person, and you can go to Index Coop's website and see the definition of what that is. But essentially, it means no U.S. persons will be able to stake their PRTs. That same restriction will not apply to the PRTs themselves. Anybody will be able to trade the PRTs. They just won't be able to earn the revenue. Now, why I think the secondary market is so interesting for PRTs is that, suppose that you have PRTs trading at a multiple of revenue. You have two PRTs out there. So one PRT is trading at 1 times annual revenue and another PRT is trading at 3 times annual revenue. That gives us some really great market signal on, what people think is the long-term success or viability of a product. So that product that's trading at 3 times annual revenue we may want to invest more in marketing that product, because the market is essentially telling us that this product has more legs, I guess, and more long-term growth opportunities.
This is the more you're explaining it, it's like hitting in my head. Like, this is almost like the holy grail of like what any project wants, is like, it's actually insane, because a normal project, like, airdrops are huge right now. Everyone's like, getting all these airdrop incentives. They get people to come do all this stuff, and then they airdrop their token, and then like everyone's like, cool, we're done, and they leave town and they're done, and that's it. And there's no way, like, people are trying like multiple airdrops, but like it's a very, very difficult problem, right? It's like they have the incentives and the incentives are gone, but you guys have like this holy grail of like incentive structures, in that like you have unlimited airdrops. It's like, that's essentially what it is like, hey, cool, we have unlimited airdrop incentives for people to come and do what we want them to do. And then you mentioned the premium of those tokens as well. Like, that's going to be a really interesting and weird thing to see play out. And then the weird markets, they're going to, like, people are going to take these tokens, do all kinds of weird things, kind of like Pendle-like things. We're like, cool, we're going to separate the yield from the token. They're going to yeah. This is a weird thing that you guys have kind of made. This could change like a lot of crypto.
I hope it does. I won't share the protocol, but there was a project, very, very large project in crypto, that used a lot of their native token in order to incentivize their flagship product. And there was another opportunity that came up. They ventured into that market, but they had no incentives left to do. And if they had used, the idea of product revenue tokens, they could have fully bootstrapped this second product, and it would have been absolutely massive for all the user, or all the token holders in the main project. So what we're hoping is that we have this opportunity to bootstrap any new product, and it isolates the risk. So by dishing out PRTs, we are foregoing some of our future revenue, but it reduces the risk so dramatically, because we don't have to be using our native token, which is in finite supply, in order to bootstrap new products, which we are maybe not sure might work. Maybe they will work for a short period of time, but they don't have longevity. It isolates all the risk to that specific product. But for the PRT holders, risk and reward kind of go hand in hand. So if that product is a huge success, those early adopters, the people who have, gotten their hands on PRTs, will share in the upside of that success. And I think the other thing is unlike a native token, PRT holders are going to be very incentivized to help us grow that specific product. So, suppose you hold a big chunk of the PRTs for the high yield ETH product. You're going to be extremely incentivized to tell everybody you can about this high yield ETH product because you're the one earning a portion of that revenue. And so I don't know how this is all going to play out, but I could even, foresee kind of like a decentralized marketing arm just form by some entity which is like, holding on to PRTs and is able to, market those products really well because those are the products that they have an interest in.
Yeah, because everyone's essentially like, imagine like the S&P 500, right? Like imagine if you could have gotten PRTs for the S&P 500 and you're like, cool. Back maybe when it launched, I don't know anything about the launch of the S&P 500, but let's say it's like, it was small and nobody really paid attention to it. And you're like, cool, I have these PRTs, entitles me to 1% of the income of this. Well, today that would be, I don't even know how much money. That's like a lot of money. You'd be making a lot of money. You'd be a very, very extremely wealthy person if you had 1% of all the income from the S&P 500.
Yeah, I think that's a really apt comparison. Back in, I believe it was the 70s when the S&P, first S&P mutual fund came out from Vanguard. It actually was in very low demand. There was a huge hurdle to try and convince people that this was actually a better form of investment. People back then believed that active management was superior to passive management through indexes. And it was so unsuccessful at launch that they weren't even able to fill out the 500 components. They had to only have, I think, 200 some of the components in the S&P 500. And yeah, I think that people who had the foresight to invest in that would have not just shared in the performance of the S&P 500 has outperformed, active management over those decades. But if they would have had that extra kicker of having a percentage of the upside in those products, wow, you would have done extremely well. And we're hoping, maybe there's the same opportunity here.
I think really the killer thing about you guys are kind of in this weird Goldilocks zone of like, you guys launch continually these products that generate yields encompassed within themselves and have so much potential because we can see that, when you look at an analog to like traditional finance. But everything ties back to your original token, the index token, because the original token is still accumulating these PRTs from each of these launches. And it's still like a way for somebody to be like, hey, I want like just exposure in a way to like the whole ecosystem and the success of the whole ecosystem. That's how people view these tokens. And so it's not like it cannibalizes your index token by launching these other tokens, right? Where maybe another project, if they're launching continually tokens, that's going to cannibalize their main token, where this just all works. It's really weird that you guys have kind of found this weird sweet spot.
Yeah, I mean, I think this is one of the really good things about PRTs and something that I've seen a lot of people kind of confused about. The way I view the index token now is that it is literally an index of the PRTs. And so if you don't want to be a person who's speculating on the success of a specific product, you can just, buy the index token, and that will be a kind of, market view on the success of all of the index products that exist that are under the Index Coop brand. So there's all this value will flow to the index token. And I think that it's a positive sum game because what we have right now before PRTs was a problem, this cold start problem with launching new products and ensuring there's enough liquidity. And if we can't get a product, to be off the ground, then having 100% of the revenue flow to the index token is worthless because it won't generate any revenue. So PRTs help us to bootstrap the products, which ultimately generates revenue for the PRT holders, but also for the index holders, because that product, if it was never able to get off the ground, it would generate nothing for the index holders.
Man, I liked index before this podcast, but like talking this through with you, I am like so bullish on index right now. Like I like want to just end this podcast so I can go buy some more right now. I'm not even kidding. I'm like actually serious because I just don't see how this is like this weird. You guys have the Infinity Gauntlet right now. Like literally the PRTs are such an overpowered thing. it's blowing my mind right now because again, you have unlimited airdrops, and that's like, we see how effective airdrops are, but you have it in a weird, sustainable way. I'm like racking my brain trying to think, how does this break? How does this, like, what's the weakness? What's the weak point? But I can't figure it out because it doesn't seem like there is one. This just seems like you guys have kind of uncovered this thing that seems so obvious in hindsight that you could do this, but also it is very unique to your situation. It's not like, Solana could do this. Like what would they do it with? You know what I mean? Or it's not like Ethereum could do this. What would the other tokens be for? What would they, accrue a value around? You guys have a really unique position that allows you to do something really crazy. And it happens to be in a space that I believe is going to be huge because again, the average person doesn't want to do all this research into tokens. They just want to buy an index. It's just, they don't, I think actually the thing that holds people back is really they don't know these products exist. Like I know about it, but I mean, most people I've never heard of index. It's like a smaller project. And that's like the biggest hurdle right now is like people don't know these indexes exist. And therefore, how could they invest in them if they don't know they exist?
Yeah, I mean, it's kind of a silly thing, I think, but having TVL is one of the like best marketing kind of vehicles that you can have. A lot of people will go to DeFi Llama or something like that and be looking at the top projects. Oh, there's one I haven't heard of. Let me go investigate it. And so even just getting some TVL into these new products that we're, going to be launching with PRTs is a kind of a marketing engine in itself, because it gets us more press. It gets us our name out there. It gets us to the top of some of these leaderboards and stuff. And I think the other thing is that we've had broadly the market has not been the most favorable in the past couple years to indexing, because ETH has generally outperformed most tokens. That's a problem that we've faced for a long time. It's not a problem that I think will exist into the future, though. I believe it was Rob Paul was just saying on the Bankless podcast about how these apps that exist on Ethereum will have to start accruing value kind of above and beyond what Ethereum's doing. And I 100% believe that. If it would be like, if no business in the United States, for example, could outperform, the treasury rates, right? Like nobody would start businesses because you would be investing capital and earning less than that. There will be if the Ethereum ecosystem or any crypto ecosystem is to be sustainable, the app layer will need to generate value, kind of be above and beyond the staking rate. And so that's why I think that, as this ecosystem matures, indexes will become even more and more appropriate as an investment for people, because there'll be projects that are generating value and accruing value above and beyond what you can just do with staked ETH or staked Solana or whatever. And it'll be even harder and harder to do that research as more and more projects exist.
Yeah, that's what I would add to is, like, in 2017, it felt like I could really understand the entire crypto market. Like I kind of understood all the important things that were happening, and I wasn't putting very much effort into understanding that. 2021, that became a lot harder, and there was a lot more going on, but it was still contained mostly to like a few narratives. You had DeFi, you had the metaverse was like a big narrative back then. You had a little bit of crypto gaming, but again, it was like you could mostly, and you had NFTs, you could mostly kind of understand most of those arenas. I would say the one that I didn't really understand was like the NFT space was very, very different than like the normal crypto investing space. Now, this cycle, it is like so hard to keep up with everything. Like my brain hurts. Like crypto gaming is its own world. Like there's things happening in that space that I'll talk to people that are really involved, and I'm like, I've never heard of that game. I've never heard of this, never heard of this. Like from my viewpoint, it's like really narrow, but they have this huge wealth of information on the back end because it's such like there's special influencers in that space I've never heard of that are massive in that space, but like nobody else in crypto knows who they are. And that's the same thing with NFTs. You're seeing that now, AI, crypto tokens, and that all these spaces are getting way more complex. And as that complexity increases and the amount of tokens and projects and apps and things increases, you have a need to simplify it. And it really feels like this cycle, like crypto indexes on chain could be the killer product, because it is like, if I can't keep track of it and this is my full-time job, how is anyone supposed to? And we really need something to simplify it and simplify these tools, or simplify all these things down. And Index is that kind of killer app that could do that.
Yeah, I mean, when I came into Index Coop back in 2021, and many of the kind of contributors at Index, have the same story, is that we came in and we didn't know, what projects to invest in. So we were looking for an index to invest in, because kind of at that time you had a lot of projects kind of coming up that were, starting to find product market fit. You could see that DeFi was a real theme. And you wanted to be a part of it, but it was just hard to know which product to pick. And so that's why the DeFi Pulse Index, was that kind of perfect product. But as you say, I mean, it's not just DeFi anymore. It's not just the metaverse. There are so many themes out there, so many narratives, which I'm aware of the narratives, but I'm not aware of the projects. And even if I'm aware of the projects, I could not, give an informed thesis on why one project should do better than the other. And so for me, it's just a lot easier to buy a basket of tokens in that theme and have it be, kind of automatically rebalanced without me having to kind of think about it. And I can just buy and hold that theme forever. And hopefully, there's a couple projects in there which do really well and can kind of carry the index and capture that theme.
And as you mentioned earlier, I just want to reiterate, because I do think this is important. Say you did hold the crypto AI index. It doesn't exist today, but say you guys had one, and I held that for forever. Maybe right now it's got like some of these bigger crypto AI projects in it. But in 2 years, those projects could be completely different in it, because it gets rebalanced all the time. So there's a huge advantage, because for the average person, they might buy some crypto AI that's popular today, then 2 years is dead. And you guys are rebalancing it, so you're going to be able to save people from being stuck in tokens that eventually die, because that thing's continually updating to what is kind of the biggest name in that sector over time. One thing that I see as kind of like a killer product market fit for something like Index would be like, I don't understand why like a wallet hasn't integrated you guys, because I feel like that's actually a killer product for a wallet. Like Rabby Wallet's one of my favorite. And I feel like they should have a button that's like, hey, indexes. And I click on it and I could look through the different indexes. I just click it and I buy it. And like that would make that product better. Have you guys tried talking to different wallets to integrate into it, into these wallets, to make it a one-click experience for the user?
Yeah, absolutely. So just kind of broadly, distribution in kind of the structured product space, whether that's traditional finance or DeFi, is the most important problem that you need to solve. You need to get to where users are and make it easy for them to access your products. Now, as you said, wallets are like a great place to do that. We have had some success with a number of different wallets. One that we're really appreciative of is Rainbow Wallet. Forever has had DPI kind of front and center, and you can buy DPI with one click with Rainbow Wallet. But another one that we are really happy with is Argent Wallet. When Argent had their wallet on ZK Sync Lite back in, this was 2022, we had brought liquidity for all of our products over to ZK Sync Lite, and our users absolutely loved that experience, being able to go in, see all the crypto indexes right in their wallet, being able to purchase with one click. And it also helped that the gas fees there were super, super low. So we were really disappointed when it was Argent decided to move over to Starknet, but they were forced to because ZK Sync Lite was shutting down. So we love Argent so much that we were like, okay, we want to reignite this relationship with Argent, and we're working right now. We're wrapping this up very shortly to bring our products over to Starknet and allowing people to just download the Argent app on their phone, maybe with Apple Pay, deposit some money into the Argent wallet and then buy our indexes with one click on one of the top layer twos. And we're also doing this. We're also bringing our products to Arbitrum As we speak, we've recently gotten incentives from the Arbitrum Foundation to incentivize bringing our products over to Arbitrum. And just to go back to the wallets point, one of the problems always has been that a lot of these wallets, they need to, in order to facilitate that swap, they need to do an on-chain transaction, and that can be very expensive and just kind of a hindrance for users. And so by bringing our products to L2s, we think that there's a huge opportunity to talk to more and more wallets and just more integrations in general, now that you'll be able to access our products at a much lower cost.
It seems like you guys could also build your own I don't know if you guys ever thought about this, but like your own Apple, like Apple App Store, Android Store, like product that's literally just like for people that want to own crypto, and they can just download it and be like, cool, it's just your guys' indexes or something like that.
Yeah.
Or even maybe some sort of incentive structure with the PRTs to incentivize kind of like affiliate like programs and different things like that, where like some people can earn PRTs via contributing to like more and more TVL, but like by sending users to actually go get the tokens. I know with a lot of credit cards, a lot of like investment platforms, they operate on a structure like that, and that's efficient. There's just so many ways you could use PRTs to incentivize people to go do the things you want to, and they don't necessarily have to be stuck with the bootstrapping aspect.
Yeah, I mean, we've actually already seen some success in this arena. We've had some early stage conversations with some kind of integration partners, thinking like, fintechs or centralized exchanges who are very intrigued by this idea of PRTs. And, being able to have that as a tool in our belt to increase the distribution opportunities for products is absolutely massive, because it's difficult to get listings. Every project wants to be listed on centralized exchanges and fintech apps and wallets and all that sort of stuff. And so there's a lot of competition out there. PRTs are a way to kind of really incentivize a lot of these partners to put Index Coop products front and center. So I think we'll have a lot of success in that arena, but we're just kind of letting our our business development team really work through those angles and try and find the most optimal integrations that we can, and using PRTs as a tool to encourage that behavior.
Have you guys mentioned what the next launch is, or you guys made that public yet?
Yeah, right now on the forum we have two ideas. We have a layer 2 index. We're just working through some technical challenges with the layer 2 tokens, and an AI index, as you mentioned. So we're looking at both of those. Those will probably both be going to pre-sale soon, pending a successful index vote. We're also, kind of looking at a number of like other opportunities, but nothing like too concrete yet at this stage.
So I'm US based. I can't stake PRTs. Can I earn them?
You are able to earn them. You'll be able to claim them, but you won't be able to stake them, as you mentioned. And so, you might want to sell them, or you might just want to hold them if you think that premium will increase. The other thing is, so if you are US and you're like, well, why should I earn PRTs, and I don't want to stake them, that makes total sense. But maybe there's a way that we can build referral programs and such, so that we can offer incentives, maybe in the form of index, that allows people in the US to participate. But we're kind of just working through all those kind of issues. They're kind of thorny issues that are a bit of a challenge. We'd love for everybody to be able to participate in PRTs, but just at this time, it's unfortunately not possible to stake them.
Yeah, you guys have your hands tied. It's not really you. It's the SEC. It's Congress and a bunch of other stuff that you guys are waiting on some clarity from that, and I understand that. So makes sense.
Yeah, it's definitely kind of a challenge, but we're trying to do everything we can the right way, 100%. And we're playing the long game here. We want Index to be a brand and a project that's around for forever. And we don't want to shoot ourselves in the foot by being too aggressive. From a regulatory perspective, and so we're really coloring inside the lines, and but also trying to be innovative at the same time, and that's where we think PRTs are a huge opportunity.
Well, hey, I love the idea that I can even earn the PRTs. I actually think that is valuable because, like you said, I can sell it. I can hold on to it if I think it's going to be a premium. Which obviously, if the PRT for the S&P 500, maybe to start it'll be worth X amount, but over time as that becomes the S&P 500, it'd be worth a lot more money. So they are able to potentially have premiums and different things like that. So that is valuable to me, and it's cool to know that I could at least get that.
Yeah, absolutely.
As always, none of this was investment advice. None of this was us telling you to go buy any PRTs or to go buy any index. This is just informative to learn about what Index is up to learn about what they're doing, to learn about this new concept called PRTs. And I'm a holder of Index. I don't know if I mentioned that at all during this episode, but I hold a decent amount of Index. It's something that I'm excited about, that I'm bullish on myself. And you should always do your own research and know what you're getting into if you're planning on jumping into something like this.